Hi everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol LIVE. LIVE made a very big move on Friday, as you can see with this big green candle, and there was a break above the red descending resistance line and red horizontal resistance line. So there was a break above two key resistance levels on Friday, and the candles are forming above the middle Bollinger Band at 151 and EMA's 4 and 8. So Live is in the process of trying to start a new uptrend. As you can see, Live has been in this multi-month downtrend, and currently the close on Friday was a break above the downtrending channel. And within the channel, there was this sideways channel formed as well, and so there was a break above that on Friday as well. So two key resistance levels broke. There was a close above the upper Bollinger Band at 196. So that is resistance on this chart, and so there was a close above resistance. So on a pullback, look for that to be support, and then EMA 4 at 182 will be the second support level. The upper wick does show some profit taking end of day, and yeah, so you have Fasto up here in the 70 to 80 bull zone and closed with the bull cross, and then RSI is up here in the above 70 overbought power zone for the first time in many months. So yeah, so this shows that strength is building, and the thing that really caught our eye more than anything was this giant volume bar. So there's really big volume behind the move on Friday. I mean, look at this volume bar compared to all the previous bars. I mean, Live is a thinly traded stock, so the key is the saying is volume precedes price, and so we'll see if that is the case here. There was this giant volume bar back here in June, and there was not follow through. That failed to follow through. It's hard to see on this chart, but the middle Bollinger Band, which is this dotted purple line, failed to turn into support, and the downtrend continued. So that is the key. That's what we're looking for here. Live is on this multi-month, downtrend, and with the move on Friday, what we'll be looking for is for the middle Bollinger Band to hold support and a possible new uptrend to begin. Okay, now this is what happened. So this is why I suggest everybody use the Bollinger Band and EMA's 4 and 8 chart, and then also use a 50, 100, and 200 day moving average chart. We like the two chart system, and we use these charts on multiple time frames. And this is Live is a perfect example of why, because if you were just going off of this chart here, you might say, yeah, this move was a little frothy. It got above the upper Bollinger Band, but look, it's looking good for possible more upside potential. And then you look here and you're like, okay, now I see what the story is. Now I mean, can you look at this chart and tell me why was there a pullback on Friday to the closing price? Well, if you looked at this chart, it was easy to see. The share price pulled back to this 200-day moving average. See, this is the big level to break when a stock is trading below the 50, 100, and 200-day moving average, like Live was on Friday. See how the candle was down here below all three levels, and then the share price. Each one of these levels acts as a key resistance level. The green line is the 50-day moving average, the yellow line is the 100-day moving average, and the red line is the 200-day moving average. And so when the 50-day moving average broke, that put the 100-day moving average on deck, and then when the 100-day moving average broke intraday on Friday, that set up a run to the 200-day moving average. And as you can see, the share price blew past the 200-day moving average, and then profit takers stepped in here at this 270 range, and then the share price pulled back, and it pulled right back and closed right at the 200-day moving average. Now, is that a coincidence that it closed exactly at the key resistance level? No, it's not, because the reason why it's not is because everybody's using the same data. We're all looking at the same charts. We're all looking at the same resistance levels and support levels, and that's why that's why technical analysis works, is because we're all using the same data. And if everyone's using the same data, then they trade according to the same information. So that's why this works. And so right now the key level to break is the 200-day moving average at 234. If live fails to break the 200-day moving average, that will equal downside risk, and that's going to put the 100-day moving average at 172 on deck. That will be the key level to turn into support. As you can see here, both that and the 50-day moving average. I mean, there was multiple times on this chart here where the 50-day moving average was tested and it failed to hold, failed to turn into support, and then the downtrend continued. And then finally on Friday there was this break above the 50-day moving average. But these levels, I'm looking at it like the 50-day moving average has been tested several times. So this might go back and test the 100-day moving average and may not retest that 50. We'll have to see later in the future. But for right now, on a pullback, the 100-day moving average is the key level to hold. And then bulls, the line in the sand is this 200-day moving average at 234. The bottom line is candles forming above this red line equal more upside potential, fail to break this level, and it equals downside risk. Okay, now let's look at the 15-minute chart. On this 15-minute chart, each candle represents 15 minutes of trading, and this is a 5-day chart. And as you can see, this is the 50, 100, and 200-day moving average chart. And we like to use the two-chart system on multiple time frames. So we use that for both monthly, weekly, daily, and the intraday charts. We really like the 5 and 15-minute charts. So that's what those are our two intraday charts we use the most. And so here we go. This is showing you what's going on with live on an intraday basis. Look at the thin trading on the 30th, the 1st, the 2nd, and the 3rd. I mean, there's hardly any trading. This is a very thinly traded stock. And with that said, that always equals caution. So you can always buy a thinly traded stock, but it can be difficult to sell. And so the key with this type of play, when money comes into a thinly traded stock, it's follow the money in and follow the money out. You don't want to be sticking around when the money flow leaves. When these volume bars disappear, you want to be gone as well. That's the theory, anyways, for the traders. Okay, so there was this move above the 200, 100, and 50-day moving averages on Friday, and then candles were able to form above. As you can see, this giant flagpole formed. This candle right here is called a flagpole. I'm sure you've heard that many times. And off the flagpole, a giant flag formed, and so you have this flag coming off of here. Let's see here. There you go. And so going forward, the key is going to be to continue this uptrend on the 15-minute chart and to break resistance. 270 is going to be the key level to break. For first bulls, you need to break 250 and then 270. And if the key is to bust through the ascending resistance line and to hold the ascending support line. If support breaks, that's going to put the 50-day moving average at 184 on deck. Okay, let's look at the next chart. This next chart is the Bollinger Band chart, and this is a 15-minute chart, and this shows the Bollinger Bands and EMAs 4 and 8. And as you can see, the candles were trading below the middle Bollinger Band on the 3rd, and so there was this downtrend. And then with the opening candle on the 4th on Friday, there was this big move above the middle Bollinger Band and EMAs 4 and 8, and so they are currently in an uptrend. So the candles are forming above the middle Bollinger Band at 222. That is the key level to hold. If it breaks, that will put this $2 level, lower Bollinger Band on deck. So so the key going forward is to bust through this upper Bollinger Band at 244 resistance and to continue riding middle Bollinger Band support higher. If the middle Bollinger Band turns into resistance, that will equal downside risk and could signal a possible start of a new downtrend. Okay, now one red flag here is MACD had a bearish crossover down here around 1:30 on Friday, and so it tried to have a bullish crossover here into the close but failed. So that's what you want to look for, bulls. If you have your 15-minute chart open, keep an eye on MACD. If the green line stays below the red line, that could signal downside risk. And if you see the green line, which is the MACD line, cross the red line to the upside, that will signal the continuation of this uptrend. And up here, FASTO is at 62.79 and RSI is at 59.38. So both indicators are in the bull zone. And so that is good. Okay, here's live. Thanks for viewing this chart. And I hope you're having a great weekend. Please check out our YouTube channel at mychartcoach.com and our website at mychartcoach.com. Thank you.